everybody. So here we go. I've been promising this video. It's just basically going over the strategy that I've been using one more time, and then getting into the important part, which is my back tested data, right? So I have an Excel sheet, and we'll run through it together. More than likely, I'm gonna put it on like Google Docs or something, and I'll make the link open so you guys can keep track of what I've been doing, right? So the strategy is super simple. It's on the 1 minute chart. The trading time is between 8:30 to 11 a.m. You're basically going to mark out the high and low between 12 a.m. New York time and 8:30 a.m. New York time, and then you're going to wait for a run on liquidity, right? You're going to wait for the high or the low to be taken, to be broken, and then a market structure shift, like a reversal to form. And then after that happens, you're looking to enter in on a fair value gap or an OTE, optimal trade entry, which is on the fib. We'll get into it when we get on an actual chart, but more just to go through it one more time. You mark out the 12 a.m., 8:30, right? Whatever price does in between that time, it doesn't matter. You let price. It's not like we can control price, but price does whatever it wants here, right? At this point in time, you're gonna grab the high, the extreme high, right? And the extreme low. And all you're waiting for is there to be a run on liquidity. So basically, let's say the high is taken out, right? That's the next step. Once that happens, you start looking for your market structure shift. In this scenario, you would want this low to be broken because this is the low that created the high that took out the liquidity. And let's just say, for argument's sake, that did happen, right? It has to be an impulsive move, right? There has to be displacement, right? It can't be like a it takes a while or whatever, like small candles, like barely breaks it. Even though I've made those mistakes plenty of times, because I just get antsy to get into a trade, but there has to be displacement in the move. Once that happens, you can either look for a fair value gap or you take your fib top to bottom and look for your entry on the 61.8. So the fair value gap is an imbalance between three candles. I'll show it to you on a chart once we get into it, right? And then let's say your fib extension. So let's say that's your fair value gap. That's the area where it's at. And then you can see that your 61.8 is below it. So you can either, depending on your risk tolerance, right? So either you want to get into the trade or you don't. Not that you don't, but there might be less probability if the fair value gap is too far away to enter the trade, if that makes sense. So for this argument's sake, let's just say you put it on the 61.8. You're going to target 2 times the risk. So 2 times the risk, and then all you do is wait for price. Let's say price comes back up, and let's say it hits both, right? Something like that. And then full TP. Well, in a perfect world, that's how the setup should work. And that's pretty much it. That's all I do every morning, for the most part. So let me just delete all this stuff, and then we can actually get into the example. Right, I'll move this down. Sorry. Move this down, delete this. So keep this up there. I don't even know what day this is. What is this? July 9th? No, July 10th. So, here we have the chart. I'm going to put it at the 5 minute just so it's easier for me to mark out my highs and lows. Again, you can put it on the hour. It really doesn't matter. It's always the extreme high and the extreme low. So for example, let's say I mark out this extreme high before 8:30 and this extreme low before 8:30. Then do it. Then I'm going to drop down to the minute chart and wait for my entry. Right? Drop down to the minute and wait for my entry. Put that somewhere on there. Let's make this bigger. Let's see, play price. Do we go down more? Or do we take out the high? Okay. So 930 came. We took out the high. This is the low that created the high, right? Actually, this is the low that created the high. So we will be waiting for this low to be broken. Right? This is the previous high. This is the lowest low that created that high. So playing price forward. And that low gets taken out. Right? So this is your fair value gap. Let me just right here. There's a few. This is one. This between this candle. So basically, if you look at this 3 consecutive candles, right, you're gonna notice that there's an imbalance in price, meaning that this wick from this first candle, right, and the wick from the third candle, they don't touch, right? There's a price gap where price never returned to, and there's a belief that whatever the algorithm or whatever you believe in will drive price back to there before continuing that. That's basically it. So let's just mark this up for right now and see how far down the push goes before it starts reversing. Right? So let's keep this on our charts. So at this point in time, you're still around here. You probably would have set a pending order, right? But obviously, price never came back. Here's your low. So if this low gets taken out, I wouldn't be looking for a sell anymore. I would be looking for a buy. The same exact scenario, but in the opposite way, right? Does that low get taken out? No. Okay. So price starts pulling back, right? I would take my fib from top to bottom and take a look at where the 61.8 is. Now, me personally, short, I'd probably get in on the 61.8, right? Let's see where, I would probably get in on the 61.8 just so I get into the trade, but sometimes I'll put in a half a position, right? And a little further up, if there's a fair value gap, I'll put another half position. That's just what I do, right? But just for this argument's sake, let's say we just entered in on the 61.8 because it was closest to price, even though you would have a better risk to reward entering on the fair value gap. But ultimately, it's up to you, right? It's up to your risk tolerance or your preference or whatever it is. So let's see, we get tagged in, and we get actually tagged into the fair value gap as well, right? So we're ultimately in the trade. So my trading time is from 8:30 to 11. So we got into the trade in between that time frame. But even if the trade goes outside of that time frame, you still let it run to TP or stop loss, whichever way. Letting this play out. Let me just move it to the 5-minute chart so it plays out a little faster. All right. Move this, put it right there. And we'll see if we get TP. And full TP. That's it. That's the strategy in a nutshell. It's super simple. And what I've been trying to do is just rinse and repeat, right? Do it over and over again. And that's it. So there you go, guys. That's the strategy. Super simple. If you have any questions, drop a comment. And let's get into the actual data of... Actually, you know what? I have to reload my sheet. Give me 1 second. Let me close this. File close. I was working on my sheet today, trying to update everything so it kind of makes sense and it'd be easier to go over. Yeah, cool, perfect. So let me throw my Excel sheet up there. Let me take off my beautiful face and we'll go over everything. All right, so I started compiling information since April, right? So I back tested from April, pretty much the entire month of April was me backtesting. Moving forward, I demoed May, and then realized that I took a demo account to about $20,000 in profit fairly quickly. And then I decided to go live, and that's when I created this whole YouTube channel with all the videos that you guys have been seeing. Um, this right here, right, this green box is all the trades. So if I took every single one of these trades from April 3rd all the way to July 14th, I would have a 55% win rate. It would be a total of 83 trades, 46 wins, 37 losses. Then I broke it down to red folder news, because I know that some people don't like to trade news, so I wanted to see what the win ratio was on actual red folder days. There was 59 trades, and I had a 51% win rate. Still 2-1, right? So I had a total of 30 wins to 29 losses. If I risked $1,000 to make $2,000, I would have made $31,000. Without news, obviously my win rate increased. It's at a 67% win rate, but I only got 24 trades. So 16 wins, 8 losses. When Powell speaks, I had 6 losers when you're looking at the 1 minute. So definitely, I'm probably more than likely going to just avoid trading when Powell speaks, because not once did I win, right? And then if I take out Powell out of the red folder days, then my win rate increases to a 57%. So I'm definitely probably not going to trade the days that he speaks. Altogether, Monday and Tuesdays were my best trading days. I had a 60% on Monday, 69% on Tuesday, and then my win rate dropped down on Wednesdays and Thursdays, and then Friday I had a 53% win rate. So that's pretty much all the information. Now, as far as my trading strategy, if I took 2 losses in one day, I was done trading. So you won't see more than 2 losses in a day. If it took out the high and I got in and went full TP, right? And then came back and took out the low within my time frame, and I still had a chance to get in, I would take the trade, right? So you might get 2 trades, you might even get 3 trades a day, depending on how much volatility there is in the market, right? So this is marking up every single trade that I saw. And then obviously there's some days that it never broke the high or the low, so there was no trades. That's what these orangish yellow days are. It's because there was no trades. This column here is compounding the account. So this is as if I had a 200K account risking 0.5%, which would be $1,000, right? Compounding the actual trades, meaning that you're risking 1% every trade, 1% of your balance. You would have had a total of $62,000 at the end of July. Well, at the end of July 14th. Now, if you didn't compound and you just went straight risk, which is 1,000 to 2,000, then you would have this number, $55,000, right? That would be the total amount gained on the actual account. So there's what is that? Like $8,000 difference, right? So that's pretty much all the information, guys. I'm gonna try to make this available via Google Doc. Actually, you know what? Let's get into the chart real quick, because I want to cover something. So I also started looking at the 5-minute chart, right? Which is basically what we're on right now. Now, the only difference is on my 5-minute chart, I will look just for the break, the high or low of London, right? I wouldn't go as far back as 12 a.m. So if you take a look at, there you go. So right here we have the high of London, the low of London, right? I would wait for the break of the high or low of London. So at this point, that's pretty much it. in this scenario, you do have a break of the high London, which happened here. But for this to be valid, you would need, where's my, you would need this low to be ultimately broken, right? But then we have another liquidity that got taken out, which was this high. So then you need this low to be broken, which it does, right? And then we do have a break of the low of London, but I still would have been um, looking for a sell just because it wicked up into London's time frame, right? Like, and it didn't close underneath London as far as these highs did. So it's pretty much the same scenario, right? You're looking for, if I replay the candles, just to make it quick, right? You're waiting for the break of this, right? And right here created a fair value gap. So you would go in on either the 61.8 or the fair value gap short. And what this is going to end up doing is you're just going to avoid some of the losers that you would have with the 1 minute chart. You also might miss out on some winners, but ultimately, when you look at the data that I compiled, you're going to avoid the losers. So you just wait for price to come back up, right? Tag in, and then full TP. Now, granted, if you did go in on this fair value gap, I think you got a 1-to-1 at least. Yeah, you would have gotten 1-to-1. So depending on how you manage your risk, you know, that could have been a winner for some people, but for me, unfortunately, that would have been a loser because I'm just either winning 1% or I'm sorry, winning 2% or losing 1%, right? So, and also I would also look at, I wouldn't just keep it to 8:30 and 11 on the 5 minute time frame. From what I noticed, I have tracked it past it, not before 1 though. So the time frame would be from 8:30 to 1, and yeah, and then I compiled some data. So we go over that as well because I keep mentioning it in my videos that I might start just trading the 5 minute. So that's pretty much it. It actually, I think it was it yesterday's date? Let me see. Where's price? Yeah, this was Friday. So we didn't have a fair value gap, but if you took your fib, it almost made it there. Like it was above the 50, right? We took out the highs of London. It was above the 50. Um, Actually, no, it pulled all the way back up. I'm sorry. I was wrong. Yeah, short position, 61.8. Oh, that's right. I ended up taking this on ES. I didn't trade on sorry. I have the memory of a goldfish. I didn't trade yesterday. So there will be a scenario where it happened after 11, right? And then full TP. So you guys could do your own back testing, but just to look at that information, let's pull up the Excel again, and then we could take a look at the 5 minute information. So basically, it's a 63% win rate, right? So much higher, but a few less trades, 76 trades instead of 80 something trades. But ultimately, you end up with more profit, $68,000 opposed to $55,000, right? And if you compounded the account, you would be you would have $80,000, which is way more. Looking at the actual individual weeks, there's still solid weeks where there's, I would say, more of a consistent profit, right? Just because your win rate is higher. There are some weeks where I lost, like this week of May, but for the most part, um, every week ended with profit. Where if you take a look at the 1 minute, This week I had 7,000, which is good. This week I have 7,000, but then 2,000 and 2,000, and then 5,000. Another $7,000 week, but then a break-even week. Then I lost 2,000. Then I'm up 10. Then it's 3. It's 5, 4. Now I'm down 2. So I had some great weeks with my 1 minute strategy, but I also have some weeks where, it was much lower, right? Where if you look at the 5 minute, they're just steady weeks. 5, 4, 4, 4. Okay, a 2, but then 6, 7, -2, 4, 5, 9, 2, 3, 3. And then actually last week was great for the 5 minute chart. It was $10,000 week. So red folders, 61% win rate, which is way higher than the 1 minute. Without news is a 68% win rate. When Powell speaks, it's still there. I still made a little bit of no. It was a break even. It was a break even. So I might just drop when Powell speaks as well. And then news without Powell, it brings it up to a 64% win rate. Monday is my best day, and Thursday. So where the minute chart, Monday and Tuesday were my best days. It's different, right? So so it's something I'm gonna look at. I'm more than likely gonna end up starting a challenge just trading the 5 minute. Now, I just back tested looking at the break of the high and low of London. So most of the time, not all the time, but there was plenty of times where the 12 a.m. to right before London was within in the range, right? So it's just a little knowledge out there for you guys to keep track of or back test yourself. Since it's on the 5 minute candle, we could really compile a lot of information. So I just back tested from the same time frame that I've been back testing the minute strategy, so I could see what the difference was. But I'm definitely gonna put together going back further, right? So I have a few other strategies, SPX 5 minute, which is really well, does really well too, and I also back tested 2022, but I don't want to just like dump everything into one video, so I'll go over that once I do a little more back testing. But since I've been trading NAS, I thought it'd be good to put it out there, right? I know that you guys have been asking about it, so it's information that is needed. Oh wow, look at that! You can't see this in the video, huh? Hold on one second, guys. Let me see if I could sit there and no. There you go. So as far as the Powell, news without Powell, I didn't know that wasn't showing up in the video. And then here as well, news without Powell. Oh, dogs are barking. That's my cue to go. Sorry, guys. Anyways, you guys have a great night. Have a great weekend, and I will see you guys on Monday.